Hi, everybody, and welcome to the Buffett and Beyond Stock Analysis Video Podcast with your host, Dr. Joseph Belmonte, which is me, and Debbie with a Y. Hi, Debbie.
Hey, hello.
And all these methodologies are based on the book Buffett and Beyond, second edition by Dr. Joseph Belmonte and published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. Now remember, folks, the clean surplus return on equity is both a comparable and a predictability model and is totally different than the traditional accounting return on equity. So don't get them mixed up. And you can equate the clean surplus return on equity as the interest rate you get from a bank. So this is common sense now. A bank account with a higher return or interest rate will earn you more money than an account earning a lower interest rate. So it just follows that portfolios made up of stocks with high clean surplus ROEs or return on equity will outperform other portfolios made up of stocks with lower return on equity or interest rate. So think of your bank account when we talk about these stocks. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. And our stock of the week, which is Ulta Beauty, everyone is asking about. And the question is this stock good for your portfolio at this particular time? And let's see what Ulta Beauty does. First of all, it was formerly Ulta Salon. It operates specialty retail stores selling cosmetics, fragrance, hair care, skin care products, and salon services. That means they cut your hair or style your hair. It offers more than 25,000 products, and that is an inventory nightmare, folks, for more than 600 established and emerging brands. Can you imagine 600 different brand names out there of products? And that's how you get to 25,000 products across a variety of categories, price points, including its own private label, Ulta Beauty Collection. Company has about 1,355 stores in all of 50 states and distributes its products also through its website and mobile applications, has about 18,500 full-time employees. Question is, because it sells its products over its website, are there other vendors out there that sell these products cheaper? That's the big question. Boy, oh boy, it's starting to look that way. So let's go. Let's see what the 1 year is. Clean surplus return on equity. Remember, this is not the traditional accounting return on equity. Is the core operations of a business, the core operations. In other words, if it's a hamburger place like McDonald's and they sell a piece of property, is that piece of property really part of its core earnings because it's a hamburger joint? Okay, so maybe selling property is not part of their core earnings, and that's the type of thing that we have to look for. Of course, that was exaggerated, but now you're starting to get what I mean. Average stock in our database has a 13.5% clean surplus return on equity, so Ulta is doing great at 20.8, but this is deceiving. This is 1 year, and we're going to see something else in the next chart. Meanwhile, net income, which is profit, clean surplus profit, average stock about 13% a year, and folks, we have a little problem here with Ulta, don't we? At 6.7%, and that's why it's having trouble now. Now, revenue a little bit better at 8.8% for Ulta, and the average stock about 7.1%. So it's bringing revenue in, but boy, oh boy, it's having a difficult time bringing it to the bottom line. And maybe that's because they have to lower their products if they're going to sell, because everybody's sitting at home in their pajamas, pushing a button, and the next day that product comes. And folks, when you go shopping and you look down that aisle of products in any store, yeah, it kind of blows your mind, doesn't it? It's very, very expensive anymore. All right, let's go to look a little closer at the clean surplus return on equity. And you can see down here in 2017, 2018, 2019, it was doing beautiful. And then all of a sudden, 2020, COVID came along and the stock dropped. Well, that's what happens when you close stores, folks. You don't make any money. And then 2021, it came roaring back. 2022,
beautiful, beautiful. But look what's happening for 2023 and projected for 2024. That ROE is dropping, so that's a pretty big drop when the market looks at that. Now, really, what does this mean? The clean surplus return on equity that is declining. It means the company's earnings are still growing, but they are growing at a decelerating rate. And that means trouble for a stock, because people that actually look at the earnings of companies, the growth in earnings of companies, all the analysts out there, they see something like this and they say, we'd rather be in a company like a Microsoft or a Google where this is steady or going up, which means that the earnings are increasing at an accelerating rate, or at least increasing at a nice steady rate, so then the market knows how to value it. But when they see this decline, they don't like it. Now, retention rate, how much money are they putting back into the company in order to grow? Well, all of it, which is great. We really love to see that. However, are they doing it efficiently and profitably? And when we come back over here to this declining return on equity, we see they are just not making as much money on their sales as they used to. And going back, yep, we can see that they are revenue or growing their revenue faster than the average company. Problem is they're having trouble bringing it to the bottom line. And what does that mean? It means they are not making as much profit on their products anymore. Does that have to do with you sitting in your pajamas pushing a button and the next day the product comes to your door? Yeah, and when you go to the supermarket or you go to these specialty stores and you see the prices of these products, folks, you turn around and walk out. It really hurts. So if you can get it better, cheaper online and faster online almost than going to the mall, if the mall is open. Don't forget, people are staying away from the malls. Malls are having to reinvent themselves, turning into bowling alleys or whatever. So people are not shopping at the mall, they're shopping from home, folks, and we can see that right here with Ulta and other products, or I should say other companies in the retail business in our portfolio. We're starting to see a decline in all of them, even the Dollar General type of stores also. So that's a little bit scary. Well, it's good for the online business and the delivery business, and maybe it saves on gas too, so we don't have to drive out there to the mall. But anyway, let's look at the one-year performance. Black line is the S&P 500, and you can see where Ulta was doing good in the first quarter of the year, first 4 months of the year, all of a sudden dropped because the market was seeing those earnings and the projections for earnings falling. Then this stock fell along with the market when the market was just having that correction. Ulta was having a bigger correction, came roaring back and then stalled out right in here, and that's where we stand right now. And over 5 years, black line S&P 500, we can see Ulta had trouble. It was doing good back in here, then all of a sudden it was having trouble, came roaring back with the market, and then now all of a sudden this year, or I should say this is 2023, we can see that the market is just not being nice to Ulta Beauty because of the drop-off in the profits. Bringing in money, yes, it's bringing in sales, but we saw in the slide before that the profit is starting to come down, and the market does not like that.
Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep those questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.